What's up, guys? Cameron back again here with another video. Um, this video topic is going to be investment strategies that I learned from a $1 billion venture fund. Um, quick little recap. When I was a senior in college, I had the opportunity to work for one of the largest investment funds in the state of California. And along the way, I learned a ton of investment strategies and everything along those lines, and just gained a huge wealth of knowledge that I just want to share with you and my own personal thoughts when it comes down to making investments into pretty much anything these days. Now, the future of finance, in my personal opinion, is that each and every single one of us is going to be responsible and able to make our own investment decisions, to where you're going to have access to all the information at your pretty much at your fingertips. So knowing this type of stuff and having your own framework and own way of looking at investments is going to be super beneficial to anybody in the future that is actually serious about making money through investing, in my personal opinion. I should preface, really, I'm not an investment professional. I have just about 7 years of experience investing my own money. I've learned a lot, made a lot of mistakes, and a lot of these frameworks just really help me when it goes into making any type of investment. In the future, I plan on, being a private angel investor. Maybe if it's in the cards, I work for a venture fund, but a lot of the stuff that I do is with my own money, and I take my own risks with a lot of the things that I talk about. And I apply a lot of these strategies that I learned from this fund in my own personal finances. So none of this should really be deemed financial advice. This is just this is a mental exercise. I want each and every single one of you to finish watching this video thinking about investing in a little bit of a different way, rather than, just hearing about some meme coin that you're going to hear about maybe in the next 8 to 10 months, and then just blindly following advice and then wondering why you got fucked along the way. I think this is just a much more sound principle. Personally, I don't take money lightly. I don't think anybody should. That's why I hate people that scam people for money, because each and every single one of us work really, really, really hard to be able to gain the amount of money that we have, and each and every single one of us should have the freedom to be able to know how to make that money multiply so that our futures are bright. Without further ado, let's go ahead and jump into the video. If you've made it this far already, be sure to like, subscribe. I'm going to be making out a lot more content for things that I potentially see helpful or things that I know. Maybe if you want a specific topic, leave a comment below. But first things first, let's start with questions to ask yourself before you actually make an investment into a company or a business or a product or anything along those lines, or a cryptocurrency. The first thing that you should be asking yourself is, what makes this company unique and special? Are they solving a unique problem? Are they doing something different than all the other competition? Are they the first mover in this specific niche that makes them stand out, makes them special? Is there evidence that people love and value the service that this company, cryptocurrency, business, or whatever the case may be, is actually providing? I know this seems like counterintuitive, but like if you're early onto something and you start noticing, a lot of social media traction, a lot of word of mouth reviews and everything along those lines, you have signs of something actually being viable, right? If you look at companies like Alani Nu or even Prime, for example, when people started buying those things, and you would see, I mean, it also helped that some of the largest influencers in the world are behind these brands. So it made a lot more eyeballs to be able to be seen and this product to be bought. But nonetheless, people kept on coming back, and you can see that in the comment section. You can see that on social media and everything along those lines. These are real signs of evidence that customers love and value the service that's being provided. How are they different and better than the current competition? So let's say you're competing in a niche that's super competitive. Okay, fantastic. Competition isn't bad. But how are they different? How are they bettering themselves than the competition, and how are they standing out? Again, tying back to that first question of what makes this company unique and special. Now, I personally like to only bet on winners. So typically there are in a super competitive niche, you have multiple winners, but in some niches, it's a market where two or three, maybe four, maybe five really take majority of the market share. So really doubling down and betting on the winners and the ones that have that clear evidence of customer loyalty and value as service is always going to be a winning strategy, in my personal opinion, from my personal experience. This one, super interesting because I didn't really know what defensibility was before I worked for this venture firm. But asking yourself the question, is this business defensible? Will they gain an increasing competitive advantage as they scale? What does it mean to be defensible as a business? Well, it can mean a number of things, right? Like, do they have something that other people don't that makes it hard for other people to replicate? So, a good way to look at this is clothing. When you think of clothing, right, it's not really hard to differentiate between two t-shirt companies. But if you have Joe Schmo Company and A Bathing Ape, that's a huge competitive advantage that's being outlined in just the brand and what that brings to the marketplace, which really makes that business very defensible for a number of reasons, just because of the brand loyalty, the brand expertise, and everything along those lines. Does the business model work, or do you have clear evidence that it'll work in the future, right? Understanding how a business actually makes money, how their models work, everything along those is going to be extremely important for you to be able to make a sound investment decision. Now, this is also very different when it comes down to venture investing versus, typical investing that you're doing in the stock market, and obviously what you're doing within cryptocurrencies. Cryptocurrencies, you can see this much clearer, right? You should always ask yourself before making any type of investment into any quote unquote company or cryptocurrency, like, how do they actually make money? What is the problem that they're actually solving? And is there evidence that they can make money in the future? If you can't really answer those questions, you should probably do a little bit more homework. When you're investing into public traded companies, that information is widely available. You're going to be able to find out how each company makes their money. When you're doing venture investing, identifying the business model, identifying how it works with scalability and everything along those lines is going to be a huge factor for you in finding a good investment. Do you believe this kind of goes into understanding trends and understanding bigger pictures? Do you believe that what they can build and build something 10, maybe even 100 times bigger than what it currently is? Obviously, you're making an investment into whatever you're making an investment into to hopefully see some type of return over the future. How big of a return do you think that is? And you should be asking yourself before you even make the investment, and constantly battle testing your belief system throughout the entire process. Again, this should be at the very top of what you're actually trying to identify. What problem are they solving, and how are they doing something unique that makes them stand out, that's proven, that has actual usability? It's not just some fugazi system or service that people aren't actually using. Is there real evidence and traction that can be seen in this business that proves to me that something is unique about it? Insights I've gained over time. Again, I've been doing this for about 7, close to 8 years now. I've learned a lot. I've made a lot of mistakes along the way. And these are just some insights that I have that I wanted to shed some light on outside of the questions that you should be asking yourself before making an investment. 1, are they a clear winner in the space? Whatever space, whatever niche they are in, personally, I like to bet on the winners and double down on the winners. If you see something like, let's give an example of X product, right? And then all of a sudden there's product X out in the market. Product X now they're so hot, they're booming, everything is looking good, but now product Y and Z hit the market. Product Y and Z's marketing strategy is to say that they are a product X killer. Typically, when anything says they are a product X or the winner's killer in a specific market, there's something about that winner or that quote unquote killer, right? Um, or whatever company they're going to end up out innovating. There's always something about them that they did something right, right? Identify if that's actually the real winner in the space. It's much harder to say who the winner in any space is because things are always rapidly changing throughout time. So again, you should always be battle testing your own investment thesis to see, okay, is this company or is this thing still the number one product in this specific space? And do I want to double down, triple down on it to see my returns over time? Typically, winners continue to win, especially when they're led by genius in the realm. Never doubt a smart founder. Never doubt somebody that's super smart at the realm of whatever is being built, because winners win, and they continue to do so time and time again. Okay, the second thing I asked and that I found, is there some kind of network effect, moat, or IP that makes this investment a better one than others that may present itself? A network effect is something like a Facebook, right? When one person joins the network, they invite 5 friends. Those 5 friends join the network, they invite 5 friends, and then it continues to spiral and spread. Network effects are something that is a known phenomenon in the internet age, in the age of information, just because it's relatively new. We're able to create these types of networks much faster, much simpler, and in a way, that is a super defensible aspect of any type of investment. When something has a network effect, typically it's very powerful, and it could result in creating a lot of money in a very short period of time. When you think of a moat, think of a castle. The business is a castle. The moat is the circular thing around it, like let's say the little lake of alligators that protect it. Again, this builds into defensibility. Moats can be IP. Moats can be network effects. Moats can be capital investment. It could be a number of things, but identify if the business is defensible, has a moat, and clearly tells you, hey, like there's something special here. And sometimes these things take time to build out, so you have to be patient when it comes down to investing. 3, I think that understanding overall trends that are happening in the world as well as human behavior really, really, really helps when it comes down to managing money and investing money, and understanding yourself and self-awareness along those lines. It's funny how money in finance and investing works, because there's a lot of things that can help you be a better investor that don't necessarily involve numbers, math, or really being good with anything numbers related. It's really interesting. Again, a lot of things about money and investing don't even really have to do with money investing. It has to do with understanding trends and human behavior and how people are going to react in specific situations. Once you've done this for a little bit and start to understand things, again, this is insights that I've gained over time. So I didn't really understand this when I first started, but like for instance, my first investment that I ever made was Lululemon. I remember buying their products for Christmas for my family because I saw everybody on my campus at the time wearing Lulu, loving Lulu, talking amazing things about it. And I spent like $80 on a pair of shorts. So I was like, okay, I'm going to try these on and see like what all the fuss is. And I remember when I tried on Lululemon for the first time, I was shocked at how good of a quality product it was. And then at that moment, I started to understand, oh, okay. But it wouldn't have started unless I picked up on why people were actually talking about this business and noticing people and things in my everyday life that made this investment decision, come to life. And I ultimately ended up making money on it, and it was great. It was a good first investment, using these sound principles rather than just following mania and hype. Again, identify patterns within your everyday life and ask yourself if they will continue or if they won't continue, right? A lot of investing is battle testing your own thesis and continuously putting it against the ringer to see if you're correct. Being an investor is being in the business of being right. You're not going to always shoot 100%, which is totally fine. You have to be okay with failure as long as your failures are like you mitigate risk and everything along those lines so that they're not too catastrophic that they send you back 20 years um, in terms of like your own personal wealth and everything along those lines. You have to understand risk and what you're willing to risk and what you're willing not to risk. And again, continue to test your own worldview. You're never going to be 100% correct. You're always going to have some type of new insight over time. Stay humble, stay scrappy in the way that you look at the world. Things will change, and they change very fast. You have to be nimble and have to be willing to be wrong. And you have to continuously educate yourself on a number of new things. When new tech, when new trends start to emerge, that's when it's time maybe to start looking into it. Great example right now, AI. AI is something that is going to take the world by storm over the next 10, 15 years. Now, I have been lucky to have gotten into blockchain when I did back in 2017, and I remember everybody saying that blockchain technology, like the hype around blockchain technology back in 2017 was the same hype that I was experiencing in 2022 with AI. And I noticed those trends and I noticed those patterns. So what I told myself is, okay, Cam, let's hold back for one moment. We can identify things. We clearly see that this has something in the market. I wasn't a first mover by any means, but I will take the time to understand AI and see where it potentially fits into my life, fits into my investment portfolio, and everything along those lines. I do think it's a very exciting investment opportunity, but what that really looks like and who the clear winners are in the space, and understanding how trends and human behavior are going to counteract with AI and integrate with AI is something that I have yet to identify. But it is on my list of things that I need to do. And 5, being wrong gets you closer to being right. But if you play on a longer time horizon, it's easier to be right over time. All to say, be a long-term thinker when it comes down to making investment decisions. Don't try to swing for the fences. Don't gamble. Again, I don't take money or finance lightly. It is not something that I joke around with. It is not something that I'm just silly about and, oh, haha, I'm just going to go do this. And no, like, I try to be methodical with the way that I approach this because I work my ass off for everything that I have. And I don't understand why. I mean, sure, some people want to gamble, some people want to invest into the latest meme coins, everything along those lines, but I'm a serious investor. I actually want to be good at this. There are real billionaires in the world from the world of investing, and I choose to have them be my peers rather than meme coin investors personally. Nothing wrong against meme coins, but hey, I just don't personally invest into them. And all to say why I love cryptocurrencies and the cryptocurrency industry in itself. All the info to make a good and sound decision is readily available for you somewhere on the web. You no longer have to pay for expensive price tags for a Bloomberg terminal, to find niche information. Newsletters are $5 to $10 a month, right? That's a Starbucks coffee. If you can't afford that and don't want to make money, I don't think I'm your audience. Like, go find somebody else. That's insane. $5 to $10 a month to go and make thousands of dollars. I'll take that bet every time. Etherscan is a free tool to be able to scan and look at blockchain data and blockchain information. Again, free. Dune Analytics, another tool to be able to look at blockchain data and visualize it. Free. Twitter, free. In the age of information, your direct network that you build can make or break your financial situation. Those that put in the effort and are willing to be wrong in the pursuit of being right will win over time. No one is going to hold your hand, though. You have to do this yourself. You have to be able to increase your knowledge over time and continue to battle test your own investment thesis. Again, these are all things that I learned and gained over my years of investing, things that I learned from that $1 billion fund that I did ultimately end up working for. Again, my name is Cameron. If you like this type of content and want to see more of it, please feel free to like, subscribe, and leave a comment. Let me know what your guys' thoughts are. Hope you guys have a great day, and let's make 2024 the best year yet.